You know, they say in speaker school, never perform, if you perform in a mass performance, never perform after an animal or a child. I don't know what's happening to me today. It was a very lively introduction, but there is nothing in my book that promises, that asks for beer. Aga ma kasvasin Eestis ja ma põgenesin siit Vene laevas palju aastaid tagasi. Kui elasin Eestis, ma õppisin Tartu Ülikoolis ma lõpetasin Tartu arstiteaduskonna ja töötasin Tartu psühhiaatriakliinikus 1 aasta ja siis ma saan tööd Vene laevas ja põgenesin sellest laevast Aafrikas. Ja sai Ameerikas, ma ei teadnud kellegi Ameerikas ja mul oli $18, see oli minu aluskapital. Ma hakkasin eesti keelt unustama, kus ma elasin New Yorgis palju aastaid ja meil on seal see väga vana klub Eesti Maja, ma olen liige ja vahel lähen seal, räägin inimestega eesti keeles ja joon pisut Saku õlu. Aga nüüd ma elan mägides, olen mägimees ja mul ei ole eesti keele praktikat, so minu eesti keel has gotten pisut vahva. Aga kui me hakkame rääkima börsist, ma räägin inglise keeles, aga üks asi ma pean ütlema. Kui ma põgenesin Nõukogude Liidust, nad panid mind tagaotsivate nimekirjasse. California University tegi raamatu Nõukogude põgenikud KGB tagaotsivate nimekirja. 16 aastast hiljem Nõukogude Liit läks katki. Ja nüüd ma loen, et teie peaminister Kaja Kallas, keda ma imetlen, tema on nagu noor Margaret Thatcher. Nüüd nad panid tema tagaotsivate nimekirja. So ma loodan, et see valitsus läheb katki kiirem kui 16 aastat. Alati hea meel Eestimaale tagasi tulema, aga kui me räägime börsist, peame räägime inglise keeles. Üks pisut eesti keeles. Ameerikas on väga kuulus circus, Barnum and Bailey circus. Ja Mr. Barnum ütles, kes tuleb circusse, loll is sündinud iga minut. Ja ma mõtlen sellest inimesed, kes loevad selle raamatu keraamika ja all. Aga see on, it's another story. In any case, let's talk about trading the markets. You can see me there in the picture wearing a tie. I tried trading with a tie and without a tie. And the tie doesn't improve things one bit. Another thing I want to say, that the higher your level of education, trading does not require much education. And the higher your level of formal education, the harder it is to make money. Why? I'll compare it with medicine. A patient, that's my background. A patient comes to the doctor, something hurts, and the patient deserves a diagnosis. Right? So if I cannot do the diagnosis, I say, let's do some tests. I look at the tests, I still don't understand what's happening. Then I call in the professor to help understand. I will continue digging until I know what's wrong with this patient. And so an educated person is used to this system. You dig, you dig, you dig, and you finally... but the markets are different. Markets are chaotic. They're in chaos most of the time, 80% or more. So most of the time when you look at the market, there is nothing going. There is no trade there. So you have to be humble enough to say, I don't know. There is nothing cooking. Not today. Not with this stock. And somebody who is very educated says, oh, I'm going to dig, dig, dig. I'm going to look at this chart. I'm going to bring 5, 10, 20 more indicators. I will find the answer. It's nonsense. It's chaos. You can bring 100 indicators. It will not help you. So you have to have this humility to understand that you are dealing with a chaotic situation, and sometimes there is an answer, and most of the time there is no answer, so you have to know to pull back. But once I trade all the time. I mean, I trade my own money. I don't manage other people's money. I had an experience in the beginning of my trading career when I knew nothing or very little. A friend gave me some money to trade, and I was trying very hard, and I got him 50% in a year. I was lucky. It was sheer luck. And after that, we didn't talk to each other for a year. And I said, if making 50% for somebody breaks or damages the relationship that we don't speak for a year, I will never manage other people's money. I manage my own. And of course, you have to have a reasonable size account to do that. But I think this picture is from South Africa. I love traveling. In the Soviet Union, I grew up like an animal in a cage. So now, when I travel. So the organizers gave me 40 minutes. 40 minutes is a very short time. You cannot become a successful trader from reading one book, and you certainly cannot become a successful trading from 40 minutes lecture. So I just want to be very clear that no magic is sold here. But what I will do is I will give you the summary, the key facts that I want you to remember, to take home, and to apply to your trading. And again, reading a book, taking one class will not make you a success. You cannot buy success. You can only earn it. You have to trade, practice, practice, trade. Okay? So 40-minute summary. Successful trading stands on 3 legs. Psychology, how your mind is organized, technology, what indicators, what tools you use, and money management. I can always recognize what stage of trading a person is in, what questions they ask. If somebody asks, how long should be a moving average? What parameters you use for stochastic? I know it's a beginner. If somebody starts talking about psychology, says, I understand these indicators and tools, and sometimes I make money, sometimes I lose it. The problem is, then I'm talking with a person at the middle stage. And finally, very rarely, somebody asks a question about money management. How do you control risk? Oh, then I know I'm talking to a person who is advanced. So today we'll try to cover all 3. Let's talk about psychology. Trading is intellectually easy. There is really very little. We'll talk about it later, but we deal with 5 numbers. You look at any stock: opening price, top price, low price of the day, closing price, and volume. 5 numbers. You don't need a college degree to do that. But emotionally, it is the hardest game in the world. I practiced psychiatry for many years, and I still have my license, by the way. Every 2 years, I send $600 to New York State to renew my license, so that I can call myself a doctor officially. Although my psychiatric practice today is probably between 6 and 12 hours a year. Some old patients get in touch. So I trade full-time. And emotionally, it's the hardest game. I thought when I practiced psychiatry full-time, for me, psychiatry was never a business. It was more like a religion. I was there to cure people. And I was more effective than most people in my age group. There were people who were better than me, but they were 15, 20 years older with more experience. And I thought I was concentrating. Now that I trade, that was not concentrating. Now it's concentrating. Trading is more demanding than practicing psychiatry at a high level. And I was teaching at Columbia University, so I wasn't just a guy running an office. Was teaching at Columbia. So it demands a great degree of concentration and perseverance and everything. And the problems are that it's very tempting. You go. I'm trying to figure out this device. Here it is, I think. You go through the markets, and there are great riches there. There is money, you go through it, and it's there. It's there every day. And you reach for it, and the market hits you on the hand. So the temptations are huge. And that's what all the beginners say. Easy money. Easy money. And it's not easy. It's never easy. And there's certainly very serious, there are sharks out there. There are very serious risks. When you're trading, when I'm trading, I heard one of the organizers saying, oh, it's about helping each other, it's about being nice, it's about being that. It's none of that. Trading is war. You are reaching into other people's pockets while they're reaching into your pocket. And you're all paying commissions, and I pay commissions. So it's a war in a very difficult environment. If you think you're smart, that's not enough. Being smart is not enough. Being better than average is not enough. You have to be way up there. So so I'm starting with psychology. Psychology is extremely important. I'm just trying to help you set realistic goals. Right? Markets can be beaten. Markets, you can win in the markets, but you cannot win in them by reading one book or taking one class. What can you do? Today you're sitting here listening. I just started. I'm trying to teach you some of the things I've learned by doing this. But what about tomorrow? What will you do tomorrow for your success? And the next week, and the next months? I have a very boring advice for you. The single best thing you can do for your development as a trader is to keep good records. To keep good records, to keep a visual diary. This picture here, this is what my diary looks like. I just snapped a picture there. We'll talk about what's on the chart later, but the point is, it was a trade in Tesla in July, and do you think I remember what I traded? Not at all. But when I look at this chart, I can say, okay, so there was a rally in Tesla, and it collapsed. Tesla went out. You see how there are these lines which indicate the boundaries of public emotion. And here it went up to the boundary again, and I sold it short. And the next day I took profits on this thing, in at 86, so that's about $4,000. Single trade. And this is what my week consists of, finding these deviations of public emotion and trading them. But the point is, I keep a diary of those things. Diary. You have a picture of your spouse, you have a picture of your children, you have pictures of your car, of your house, things that you love and care about. You should have pictures of your trades the same way. By the way, the program I use for creating that visual record is called Snagit, S-N-A-G-I-T. Excellent program for keeping charts. I wrote a book, long story. Many years ago, my publisher was asking me for a book, and I didn't have a new book in me. But long story. But I said, look, I cannot write. I said everything I wanted to say, but I will interview traders who will show me their trades, and then I will comment on their trades. 16 traders, men, women, Americans, foreigners, stocks, forex, options, you name it. Later, people, what do they have in common? You know, all of these people had excellent records, really excellent records. Show me a trader with good records. And by the way, most traders are men, but the percentage of successful trader is higher among women. Why? More disciplined, better record keeping. You know, women do this boring, you know, men are out to make big money, and women have these terrible questions like, how will we pay the bills? And what about the children? You know, and you know, the sense of reality, essential. You have to review your diary. So once you keep your diary, that's step one. You document your entry and your exit, not just in numbers, but in pictures. And when you have the diary, so the trade. Oh, by the way, let me ask you. You know what? How many people sell short? Okay. You know what selling short means? Everybody knows buying, right? You buy something for 10 euros, you sell it for 12, you have 2 euros profit. But what if you look at a stock that's selling for 50 euros and you think it's garbage? It's not worth 50 euros. It's going down to 30 euros. You know you can make money on that, right? You can sell first and buy back later. Google it. They explain how short selling works. I'm a professional trader. Everybody buys. I love shorting. I love finding situations where everybody is like, wow, GameStop, GME, right? You know GME, this crazy stock? Well, that's my bread and butter. I mean, GME goes up, I hit it on the head. So I sell short. So the trade I'm showing to you is short selling. So this stock, Root, it's a computer company. It goes outside of the envelopes. Above the envelopes is patient is manic. Below the envelope, patient is depressed. And in the middle of the envelope, there is a line which shows what is the average consensus of value. So red arrow, the stock was, you see how it was sticking its head out of the envelope, but it couldn't go anymore? The optimists were, not enough energy. I sold it short. 4 days, the green arrow, 4 days later, shows where I covered my short. In other words, I sold the stock high, now I'm buying it back cheaper. And was that a good trade or was it a bad trade? I don't know. At the right edge of the chart, there is this atmosphere of uncertainty. You don't know, is it a good trade or a bad trade? But 2 weeks later, I can see what happened next. I covered short a little early in the value zone. If I held longer, the stock would have gone I would have gotten even more profit. But after that, the stock exploded. So if I held really long, I would give all my profit back. So overall, I would say on a scale from 0 to 10, it's about 8, right? It's not a perfect trade, but it's a good trade, which I'm perfectly happy with. This is the value of having a diary, and this is the value of updating your diary 2 or 3 weeks after you exit the trade. I've got to say, many of your investors, you buy investor Thomas, you buy something and you plan to hold it for 30 years. It's a wonderful plan, and people like Buffett do it, and geniuses do it. But you have to trade what your temperament is. It's like selecting a field in medicine. Do you decide to be a surgeon? Do you decide to be a pediatrician? Do you decide to be a psychiatrist? You have to find out it's an emotional decision, right? I did not go into psychiatry because I thought I can make more money there, or I can take a nap. The patient is talking and I just People do that. You go where you. So I tried long-term investing, and just emotionally, it's not me. I hold the stock, and the stock is showing profit, and then it's going against me. I plan to hold it for a year, but it's going down now. I grab what profit is left, and I get out now. So my time horizon is short. My time horizon is about 2 weeks. So most of my trades are shorter, a week or shorter. Okay? Just to say where I'm coming from. This doesn't mean that you have to trade this way, but you have to decide who you are, what you are. Do you like long-term? Do you like short-term? Where you're comfortable. I happen to be comfortable in a place where very few people live. There are people who live in northern Alaska, right? That's where I do with trading. I like short-term and I like shorting. I like to see where optimists are coming in and going crazy. They say, I need the stock, I need the stock. I sell it short to you, and I'll buy it back from you later in a week. Right? So, but it's a personal decision. It's not, you can make money long-term trading, you can make money short-term trading, and you can lose money both ways also. But you better find out what you're comfortable with. So that's pretty much, that's a very short version of what I wanted to say about trading psychology. Figure out where you're comfortable, because that comfort zone is different for different people. Right? And some men like girls, some men like boys, and some men go to the monastery, right? So you decide what is yours, what you want to do, and follow it. Follow what you do. Don't try to force yourself into some kind of thing. And keep a diary, keep a diary, keep a diary, keep a diary. We're turning the page. That was a very short, but the most important things I want to tell you about trading psychology. Find who you are, and it takes time. It took me years. I made all the mistakes in the book until I found where I want to live. I want to sell short, and I want to be short-term. So let's move on. Let's talk about the topic that nobody talks about. Actually, there are thousands of books on trading. I think my book is the only one that explains risk management. And I'm not saying it to brag or to push the book or to sell the book. It's a topic that's not discussed. I used to have a teacher. I grew up in Mary Valley. I went to school in Pirita, and we had a biology teacher there who was this old maid. And so we had to discuss in biology this topic, sex. Yeah? We cannot pronounce the word. And so she would be postponing it. And then in May she would say, well, kids, I'm sure you've read it yourself. Year finished, right? So this is the topic of money management. How do we keep away from the sharks? This, you see, is financial pornography. You've seen those ads, right? You received those emails. Easy money. There are easy losses, yeah, but that's about the only thing that's easy. Get rich slowly. You can get rich slowly. You can get poor fast. That you can do fast. And look at numbers. Here are certified geniuses. Warren Buffett, his lifetime average is 22%. And he is not a poor man, I think. In the end, I will give you a list of some books which I think are very important for trader development, and there will be 2 books about Buffett. He is a genius. I'm a short-term trader. He is an investor. I absolutely admire what he does. So, but Soros, another certified genius, 29%. And this guy, Simons, he just died a few months ago. Now, he is an absolutely brilliant guy who made over, he died one of the richest men in America, although he kept giving money away to charities, 61% a year. That's a magic number. That's really the magic number. And then I see a beginning trader coming in and saying, well, I have 5,000 euros, I want to make 5 into 10. Right? Is there a reality somewhere there? We'll talk about it in a minute. So Warren Buffett has, please read, Warren Buffett has 2 rules of investing. You all can read, I don't have to read it for you. Rule number 1 and rule number 2. Makes sense, yeah? So you have to be, first of all, you have to count money. You have to be organized. For one thing, and just a few snippets of information. For example, every trade has to be planned. I have a spreadsheet in which I plan my trades. All the conditions that the trade has to meet are in the vertical lines, and the trade is in the horizontal line. And so I check those boxes, and if I cannot check the box, I move the chart. That's it. I don't look at the stock anymore. If it doesn't meet my conditions, one condition, if it doesn't meet one condition, I don't go there. And this is one of the things in my spreadsheet. You have to write down by hand your entry, your target, and your stop. If you don't have those 3 numbers, you're not trading. You're having a lot of fun probably, but I wouldn't call it trading. Yeah. 3 numbers. Furthermore, trading is dangerous. Trade is dangerous, and to reduce the danger, you have to use rules. And the basic rule for any beginner is never to risk more than 2% of your account equity. So, for example, if you are trading, let's say you're trading with a 100,000 euro account. What is, do you have a calculator? What's 2% of 100,000? And a good trader, by the way, you don't need algebra, you don't need computer, but you need to count quickly. Plus, minus, multiply, divide, approximate. I mean, those things you have to do. And if you cannot count quickly, then a good way to practice is when you go shopping, and you give they give you the price, and you give them 50 euro paper. You calculate how much your change will be to the penny. To calculate your change before you receive it, right? That's a good, easy, cheap exercise. You're buying it anyway. Learn to count. So the 2% rule is a survival rule to prevent you from being eaten by the sharks. And this is the continuation of that rule. I call it the iron triangle of risk control. So let's say you have your $100,000. Anybody had a calculator? What's 2% of $100,000? Oh, we have people with calculator. Okay, so it's 2,000 euros. 2,000 euros. So 2,000 euros is your risk. You look at a stock, and let's say a stock costs 100 euros. Easy to count, right? 100 euros. And remember, every stock, every trade deserves a target and a stop. So let's say you're buying the stock at 100 euros, and you say, if it goes down to what? I don't want to own it anymore. You want to put a stop at 95, you want to put it at 90, you want to put it wherever. It depends on your technical things, which we'll discuss. Let's say you want to put a stop at 95. So what's your risk? So your risk, your planned risk is A. You're planning to risk 2,000 euros. B, what is the distance from your entry to the stop? You're buying at 100, and you say at 95 I am running. So 5 euros is your risk per share. Now we get the calculator out again. If your total risk is 2,000 euros, and your risk per share, per one share, is 5 euros, how many shares are you allowed to buy? That's C. This is how you decide your trade size. You don't just say, oh, I'm a 100-share trader, I'm a 200-share trader, I'm a 1,000-share trader. You have a formula which tells you what is your number of... And by the way, 2%, it's for beginners. It's for people with small accounts. Because if you trade, let's say, $1 million account, then 2% is $20,000. You want to lose $20,000 in one trade? I don't. Yeah. Yeah. And you have 2-3 losing trades in a row. Now you have a real drawdown, right? So when I trade, my risk is, let me see, is less than 0.25%. It's a serious size account, and I'm 2%, please. Yeah? But you start with 2% when you trade a small account. And by the way, I had a conversation today at lunch with somebody. The person has a tiny account, just a few thousand euros. What do? If you have a few thousand euros, don't play this game that I'm going to double my money. You want to double your money, buy a lottery ticket. Better odds. If you have a small account, you trade for the track record. What is your percentage gain, and how bad are your drawdowns? And I have a friend. He first generation college educated in his family. But he hated. He was an engineer. He hated the thing. He got a job as a clerk on the floor of the exchange, and he saved $50,000. And he began living from that $50,000, and he was generating 50% profit every year. So $25,000 is not a lot of money in New York. And he is a very modest man, so he was living on 25. He did it for 3 or 4 years, keeping good records. And then he had a bad year. He broke even. So he had to eat his capital. But by that time, because he had track record, there was a company that was funding traders. He contacted them. They checked his records. And they gave him a free quote machine and $100,000 under management to trade. He would get 2% of that money a year as sort of as a salary and 20% of profits. By the time I met him, he had $6 million under management. They kept increasing what he had because he was having good results. What's 2% of 6 million? It's $120,000, if I'm correct, if my calculator is working, plus 20% of profit, right? So, and he was trading the same. So the idea is, if you have a small account, develop a track record. Forget about making a fortune out of $10,000. Yeah. So that's about what I wanted to say about. So to summarize, I hope I'm not running too late. I better speed up. Be organized, the 2% rule, and be realistic. If you don't have a big account, trade for the track record. Technology. Third thing, trading is simple. You don't need a college degree for that. About 15 years ago, I was still living in New York City. For 1 year, I taught a course for free called Money and Trading in school for kids. And kids made money. I was managing them. But in any case, you don't need to finish high school to trade. You need discipline. My trading is simple. This slide shows the tools I use. There are prices, there are moving averages, there are channels which show how crazy the market gets. There is an indicator called MACD that shows you the power of the dominant market group, and there is something I developed called force index, which combines volume and price. So that's it. That's it. There is no... And by the way, I see these pictures of people having these walls of computers. I trade from a laptop because I have a desk with a treadmill, so I get on a treadmill desk. Then later I might sit at a real desk. I like to sit on a balcony with a cigar and smoke and my laptop. Sometimes I sit in an armchair in the living room. So I never trade in one place. I have a comfortable home and I kind of move through it depending on the weather and whatever. So I trade from a laptop. I don't have a wall of computers. I am trying to start using a second screen, to use an iPad. But you know, you don't need, complexity is not needed. And here's an example, just a quick example of two trading systems, one of which is my favorite. Here is a system, pull back to value. I show that watch in the corner to remind you that this is not a complete system. We only have 40 minutes, right? So this is pull back to value. Look, the stock is running up, and it gets crazy, it pulls back to the moving average. Gets crazy, pulls back to the moving average. Gets crazy, pulls back to the moving average. If you like following the trend, you buy not when it's high, but you buy when it pulls back to the moving average. Moving average gives you the average value. So if this stock, it happens to be MSTR, which is I don't do crypto, but this stock, this is a stock based on crypto, and that's what I trade. Well, I traded it a lot, not in the recent months. But you buy those pullbacks and then moving average is turned down. The system is, that's it. The system is finished at this point. You stop trading, you find another stock. But you see the logic of it, right? There is, it's not like, there is no mystery about it. These indicators make sense. Now, you may need to read a chapter in the book to understand them better, but there is no mystery about it. Discipline, discipline, discipline. I don't like following trends. I find it boring. I don't have patience for that. As I mentioned before, I like selling short. And occasionally I buy. And I like finding situations in which the market turns. I don't ride trends. I play a much more risky game, but it's temperament. So here, this stock happens to be Apple. In March, Apple falls to this level, and MACD shows you how strong bears are, and the force index shows you the same thing. There is a rally, back, and now the stock breaks support. The stock breaks to a new low. Well, this is where people get desperate and they sell it. Please take the stock off of my hands. And I'll say, I'll be a social worker. I will help you in your pain. I will take your stock at a discount. Right? Why? Because MACD histogram, this is how strong. So the stock is cheaper, but MACD histogram shows that bears are weaker. And then prices pull back in. Well, bingo, this is where I go in. So we have a false downside breakout with a bullish divergence. Let's go. This is a system for trading reversals. And again, a single lecture is not going to teach you to trade, a 40-minute lecture is not going to teach you to trade the system, but I want to get the idea across to you. It is a logical business. And intellectually, there is nothing much. Emotionally, it's very hard, right? You have to have patience, you have to have courage, you have to have, and how do you develop those wonderful qualities? You keep a diary and you trade to small size. One of the biggest lies in this business is, and I'm sure you've heard this lie and you will hear it again, earn while you learn. Heard it? Make money while you're learning. Well, let me ask you, I hear there's money in dentistry, you decide to go to a dental school. Will you be earning money while you're in dental school? You will be paying money, right? When you start learning the thing, you will be paying money. And you will be paying your money in losses. That's how it will go out. So
How do you reduce your expenses? You keep your trade small. You learn with small capital. You may have a big capital, but you learn with small money. How much? I think that even if you're a substantial person and you have money, nobody should start with more than $100,000. I would say starting at about 20, you can start diversifying a little bit. If you have 5,000, there is really it's a little too little. About 20 is a starting spot. But even if you have millions, do not go above 100,000. And the thing is, you have to, we don't have the time for that today, but you have to earn the right to increase your size. I live by that rule. I keep increasing my size slowly as I achieve my profit targets. You set a profit target, you get to that profit target, you can slightly increase your size. So, I think I managed in my time. 40 minutes is a short time. Key points: psychology, money management, technology. Here is a list. I don't know whether you can get this PowerPoint. I have no problem sharing it with you. But here is a list of books I recommend reading about Buffett. Take a picture if you like. The Snowball is a fantastic, fantastic book about Buffett. The second is also The Making of American Capitalist. The Man Who Solved the Market is about the Simons guy, certified genius. These are the books I would recommend reading. Okay. If you like, I have a partner, and two of us run a trading group called Spike Trade, and we have members around the world, even in Estonia. There will be a class that Aripaf is organizing on Monday, and if we get a chance, if we have time, I don't know, questions and answers.
Yes. Thank you very much. Applause.
Thank you. Thank you. Thank you.
Thank you. There's some specific questions about the market, some kind of instruments and stocks. So we can see if you can switch to the screen, if you can, and I will ask some questions. There's questions about this emotional resilience and psychology. People are asking, like, are the best traders like a psychiatrist, psychologist, and how long it takes to develop this kind of emotional control?
I haven't seen too many psychiatrists in this business. How long time it takes? Long time for most people. Accountants tend to do well. Military people tend to do well. People who are used to discipline, to numbers, to strictness. Yeah. But there is no specialty that good. We had a guy living. I used to live in Vermont before I moved to New Hampshire. We had a guy who died a few years ago. He was pumping gasoline at a station, and he was a widower. He had no family, and when he died, he left a $7 million estate. $6 million to the hospital that was looking after him, and $1 million to the library. Why? Because every day after he finished pumping gas at the gas station, he would go to the library and look for dividend stocks. And buying dividend stocks, this guy, essentially a very low-level worker, died with a $7 million estate. So,
one thing is to go into like specific stocks. But lots of people are interested, where do we stand right now in the whole market? When we take SP 500, where do you think we stand?
Well, I know exactly where it goes, but I need €5 for that. Look, the market, one second, I'm not sure I have internet, so I do. It's not showing what I want to see.
You have to connect this one again.
Again?
Yeah.
Okay, iPhone. Okay, thank you very much. Look, I think, thank you. I think it's coming. I think the market is in a hugely, hugely dangerous position now. Why? The main index of the market is S&P 500, Standard & Poor's 500, and that's 500 biggest stocks in America, right? And that index is making new highs. It just made new record highs on Friday. Lifetime highs, never been so high before. S&P and NASDAQ, never been so high. And meanwhile, if you look, let me see, I'll try to show this to you. If you look at let's go here and let's go NHNL. Okay, if you look, by the way, this company where I get my data there was an article not long ago in Aripav. It's an Estonian American who runs this company, the cleanest and best data in the business. I've been a huge fan for 20 years. So the market has made a new high, lifetime, and it's been making new highs, and it made new lifetime highs on Friday. 350 stocks out of 350 stocks made a new high for on Friday, and 750 made a new low. Okay? So what it shows, by the way, it's a free website, barchart, barchart.com, B-A-R-C-H-A-R-T. It's not S&P 500, it's more like S&P 5. There is a small number of giant stocks, Google, Amazon, Apple, Tesla joined the group, NVIDIA kind of sank out of the group. But there are six major stocks that are pulling the market up. And the rest of the market is very weak. This cannot continue. Right? Eventually this eventually it's going to end badly. How soon that will happen? That's a $64,000 question, right? I've been waiting for this thing now for several weeks, and it hasn't happened. And I made money anyway, so because I was shorting weak stocks. One of my rules is when I sell short, don't attack the leaders. You know, the wolf goes to eat something in the forest, and there are deer. The wolf doesn't go for the biggest deer. The wolf goes for the deer who is old, young, sick, lame, right? I look for stocks that are suffering and I sell them short. I leave leaders alone, which is how I survive selling short in a rising market. But I think this situation, it's the unhealthiest market I have seen in decades. So I expect trouble. Sorry.
Yeah, so this probably answers to the next question. People are asking, have you shorted NVIDIA last year? And the people are asking, what are your thoughts on NVIDIA?
Well, NVIDIA is Investor Thomas's favorite, and Investor Thomas...
One of the favorites.
One of the favorites, yeah. Look, I shorted NVIDIA, I lost money in NVIDIA, then I shorted it some more, and I made some money in NVIDIA, and now I just stay away from NVIDIA because it's a leader, right? And I don't attack leaders, right? NVIDIA is a great stock with great technology, but if we let's put up a chart. So it's NVIDIA. I hope you can see it. Yeah, this is the weekly chart. So every bar represents 1 week. So this is the weekly chart of NVIDIA, and this is the envelope here. This is the this is the envelope. Oh, it doesn't work. In any case, this is the envelope that shows manic or depressed. And so you tell me, is NVIDIA normal, manic, or depressed? It's manic, right? It's manic. So we'll look at the so the weekly chart says, be very careful, but don't be too afraid, because if you look at a MACD histogram, this was the power of bulls in the beginning of the year, and this is the power of bulls now. They haven't gotten much weaker, a little weaker, but the height is the same. We look at the daily chart of NVIDIA, and NVIDIA went a little crazy in June, pulled back to value, pulled back to this yellow line, and it's just going flat here. It's if somebody held a gun to my head and said, Alex, you have to do a trade in NVIDIA on Monday morning and don't look at it until you get home next Friday, I'd have to buy it. Right? It's not an attractive buy for my way of thinking, but if I had to choose, and by the way, that's a question that I trained myself to answer. It's so easy to say, well, on one hand, on the other hand, blah, 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 blah. If somebody held a gun to your head, what would you do with the stock? I would buy it.
The same. So, another hot stock that has actually even a greater volume is Tesla. Do you have any specific thoughts?
Tesla. So we begin. Look, first of all, I want to show you before I look at Tesla. Before I look at any stock, I do this. There is a website, and again, you can see the name, Finviz. It's an excellent statistics research website. Before, I didn't do it looking at NVIDIA because I checked NVIDIA earlier, but before I consider trading, never mind trade, before I consider any stock, I go to Finviz, and I have 3 questions that I want answered. First, when is the earnings report? Now, if you're an investor like Investor Thomas, you hold the earnings reports. If you're a trader, you don't trade going into earnings, because earnings can be a surprise, and earnings can send the stock flying or they can crash it. And if the company is honest and doesn't leak, some companies leak information, but there are not too many of those. Most companies are honest, and so earnings report is a real, true surprise. You often see prices gap on earnings. Okay? I'm a short-term trader, so I want to begin by going to Finviz, and I check earnings. We go here, and it says earnings will be on July 23 AMC, meaning after market close. So Tesla will have earnings on July 23rd. Well, we have 2 weeks left, right? So as a short-term trader, it's legal for me to trade Tesla, but not for very long. Really, somewhere by the 20th, 21st, I should be out of it. Firm rules. Next question. What is the short float? Again, look it up. I don't have time to explain it to you today, but short float shows how many people sold the stock short. It's about 4%, which is absolutely normal. But if you look at some stocks, they have very high short float, and I'm afraid to sell short those stocks because bad things can happen. And the last thing I want to check is, does the stock have dividends? Because if it does, I want to know when is the dividend date, because that also can move the stock. So with Tesla, I have no problems, right? I'm allowed to trade it, so now I'm allowed to look at the chart. Remember I told you there are several things I have to check off in my spreadsheet to trade. If one of them doesn't work, I don't look any further. I stop. At that point, I go to the next one. So Tesla jumped through all those hoops, so we're okay. We can look at price now. We always begin with the weekly chart, Tesla. We look at the weekly chart. So you tell me, is this puppy normal, manic? Wait a second, is this... I showed you daily by mistake. Weekly chart. So Tesla had a wonderful time for the last 2 weeks. It just entered the manic zone, and this force index, you can see it below, it's outside of the channel. Here it was outside of the channel, and it was the top. Here it was outside of the channel, it was the top. So I would say it's a dangerous position, right? But that's all. I want to see. I don't trade weekly charts, but I want to get the big picture. So it says to me, Alex, you might get a shorting opportunity. Yeah. So I go to the daily chart of Tesla, and Tesla is busy going crazy. Now, if you want to buy Tesla, it closed on Friday at $251. The value of Tesla is $200. So if you buy it now at this price, you will basically say, I call it greater fool theory. I am a fool. I am paying $250 for something that is worth $200. But I think that down the road I meet a bigger fool who will also overpay even more. There are no fools in this business. Lots of gamblers. Gamblers, fools, this is the business that simply does not attract foolish people. So Tesla is overvalued. There is a buying panic going on, and actually, I'm waiting to see. But well, it will be too late by the time I get back home because I'll be out for another week. But if not that, I would be looking to sell it short. But I cannot sell it short now. Why? Look at the dynamic between opening and closing prices for the last 4 days. It opens low, closes high. So dynamic is positive. There is a rally going on, right? So I have to sit on my hands. So count me as I'm circling around it to sell it short. And again, a short, maybe in the long run, it will go up. But if I were to buy it, I would only buy value. I only want to buy something when it's in the value zone. Meanwhile, I'm waiting to see when the dynamic will shift, where it will close cheaper than it opened. And that short-term reversal is something that I will be in a mood to trade.
This is one of the last questions, but this is one of the most popular ones. You already said that you don't trade crypto, but people are asking, what's your thoughts on Bitcoin?
I don't know. I simply don't know. I have a Bitcoin chart I can pull up for you. I trade. This is Bitcoin. This is Bitcoin on the weekly chart. I'm sorry, the screen. In any case, this is the Bitcoin. I traded MSTR, and I can show you those trades. But Bitcoin is having a serious case of headache at this point. It was 76, and now it's 56. 56 is cheaper, I think. Yeah. But we can see MACD histogram is becoming extreme. There is a selling panic. There is a selling panic going on. So if people are panicking and selling, I would rather buy this thing, right? So that's on the weekly chart. We look at the daily. This is not a divergence. In order for me to call this a divergence, MACD has to go positive and then go negative again. So I look at this as a falling stock, and I have really nothing much to do with it. And I must tell you that when I do my research, when I do most of my work on weekends, and then in the mornings before the market opens, I really tighten it up and I do the numbers and everything. I may review 50 stocks, 70 stocks, and then end up trading 2. I look at something like this, there is no trade for me. And just move on. Oh, I'm in a hurry, I should buy something. Yeah? No. Patience, long-term, I'm a short-term trader with a very long-term orientation. I'm doing it now, and I plan to be doing it, for a very forever. There is no, in any case.
Thank you, Alexander, and some practical knowledge also. The best information is shared in the saunas, so I hope you enjoy Investor Thomas and others of us.
I'll show you, one second, I have a comment on that. Oh, it's here, sorry. What is it? And,
You're prepared. You're prepared. So
like you.
Yeah. So it was a great honor.
Thank you.
Thank you very much.
Thank you.
Great applause to
Thank you.
Alexander.
Thank you very much. Thank you. Thank you.